Hey guys, welcome back to Reserved Investments. So the one video that I haven't done at all on this channel is demographics of wealthy collectors. Now, I know some of you are interested in this. As soon as I said the term wealthy in that particular statement, a lot of you are probably going to shut the video off. But if you stick around, I will tell you this is going to be a very exciting video, and I haven't seen any video like this on YouTube as of yet. So I have some statistics in front of me on what the wealthy collect and why they collect some of the items that they do that I thought that you guys would find fascinating. So a lot of this information was compiled by certain research firms, wealth management companies, and even the overall financial news media. Believe it or not, the Wall Street Journal, CNBC, the New York Times, they all release information, demographics on collecting or even collectibles. This is why sometimes if you scout CNN, if you scout Fox Business, if you scout MSNBC, or even CNBC, you will see articles devoted to a record price being paid for coins, or a comic book, or a classic car, or a fine wine, or a watch, or some other type of collectible, whether it be on the antique side of the trade, the art side of the trade, or even the pop culture side of the trade. These are always fascinating statistics when we get into the nitty-gritty. So I composed certain statistics that I'm going to go over with you today to give you an inside look as to what the wealthy collect that maybe the poor and the middle class do not collect. And we're going to talk why that is and how the wealthy view their collectibles that they put in their collections. So first, we got to define the terms. Everybody hears the term wealthy, everybody hears the term rich, and they have a different definition as to what that means. For purposes of simplicity, this is how I'm going to define these terms. When I'm referring to someone who is wealthy, in that opinion, it's someone like me. It's someone who has a net worth of at least $500,000 or more. Now, what do I mean by $500,000 or more? What I mean by net worth is if you take all the assets that you have and or know, and you subtract any liabilities you owe from those assets, that's how you get net worth. So let me use this as an example. Let's assume you have $300,000 sitting in a brokerage account. You live in a house that's worth $300,000, but you owe $150,000 on that house and you have no other debt. Your net worth is $450,000 because you have a $300,000 house that you owe $150,000 on it. So $150,000 of that house is free and clear. And you also have $300,000 in a brokerage account. That means by default, you have a net worth of $450,000 to use that simplicity. Now let's suppose out of that $450,000, you have $20,000 worth of credit card debt and $30,000 in school loans. Well, subtract that from that $450,000. Now you have $400,000 left. So that would be your net worth. Net worth is simply assets minus liabilities. It has nothing to do with what you earn. It has nothing to do with your earning potential. Again, net worth is defined as assets minus liabilities. It is akin to a balance sheet of the individual. So what that means, again, let me just repeat that for the people that may not have had finance training or education. Net worth is simply assets minus liabilities. Whatever you have minus what you owe, that's your net worth. Now, to be fair, net worth can be very subjective. Let me give you an example. Those of you out there that are sitting on a collection of video games that might be worth $10,000, $20,000, or magic cards, or Pokemon cards. Well, if you take the time to sell all that stuff, list it on eBay, consign it to auction, obviously you're going to encounter fees and other costs associated with liquidating that collection. So it may be valued at $10,000 or $20,000. You really can't total that into your net worth because you don't know what the end result is going to be. You would have to estimate the value of that collection. Does that make sense? Now, the other term that I want to define, remember, wealthy is $500,000 or more in net worth. Rich is generally defined, at least for the context of this video, as having a net worth of $5 million or more. So wealthy at the bottom end of the scale is having a net worth of $500,000 or more. Rich, in my opinion, for the contents of this article and video, is having a net worth of $5 million or more. So let me start giving you some hard facts that you may find interesting. Investors and collectors tend to assign a substantial amount of financial and sentimental value to their collections, but most do not always realize their financial value when they go to sell. Now, ironically, you would think that wealthy and rich collectors or investors who gravitate towards these markets, they would have a better success rate than the average person out there who collects a lot of these items. Ironically, in most cases, you would be wrong, because the one thing that happens when a person amasses a large net worth of wealth, sometimes they allow passion to take control, and they end up overpaying for a lot of the items in their collection. A lot of wealthy people who have a higher than usual net worth, they have more money put away, so they don't worry as much if they overpay for a rare coin, a rare toy, a comic book, or even a traditional antique. So as a result, they're more likely to take risks with their money. Remember, what do I tell you guys? You have to be financially established before you get involved in the antiques and collectibles trade from a financial standpoint. Again, those of you that watch this channel, those of you that are just classical or casual enthusiasts in the trade, you spend maybe $50, $100 a month on whatever it is that's your passion, whether you buy a booster box of Magic the Gathering cards, Pokemon, whatever it is. Maybe you save up your money and you buy a rare vintage graded Pokemon card or a coin or a piece of currency. That's okay. I'm not criticizing you. But if you want to get into the antiques and collectibles trade and you want to start investing in it, you better already be established. Now, what do I mean by established? In my opinion, and a lot of you guys don't like this answer, but I'm going to state it. Established to me means somebody that has six figures already stashed away in mutual funds, ETFs, the financial markets, the stock market. They're already set in that regard. Six figures, I mean $100,000 or more. That's the type of people that tend to get in the antiques and collectibles trade from a financial standpoint and are able to succeed because they already have a basic understanding of economics and finance. So let's continue here. Here's some interesting facts. First, I need to state this quote that I agree with fully. The rich are actually master collectors. The reason why they're master collectors is because they collect rents, dividends, and royalties, and that's what made them rich to begin with. Now, it's true, most people that have a net worth of $5 million or more. There's two types of people in this bucket. There's the people that are self-employed, they own their own business, and they become extraordinarily successful to the point where they can amass that amount of money in a short time period. The other type of person that falls into that category is someone who gets lucky. They're born with a proverbial silver spoon up their ass. They inherit a significant amount of money in their 30s, 40s, even younger in some cases, and in some cases in their 50s, 60s, and 70s. And as a result, they now have a higher net worth than average. Now, here's something scary about people who inherit money. Believe it or not, people who inherit money, who've never had an understanding in economics, finance, they never had to work for it, 3 out of 4 of those people will hit financial trouble sometime in their life. Why do you think, when you guys asked me, I got asked this in one of the Q&A series I did earlier. I don't know if I answered this question on camera or not. People ask me if I play the lottery or if I gamble. The answer is no to both scenarios. I will not go near a casino. I will not play the lottery. The reason being is I've always considered gambling. Outside of entertainment, I know people go to Vegas, they go to Atlantic City, they spend $100 or $200 here just to have fun. But I've always considered gambling to be a tax on the stupid. I state the same thing about the lottery. In my opinion, and remember, the opinion of Sean Cermak really doesn't matter, but in my opinion, the lottery should be abolished. The lottery, all is what it does is it takes money from the gullible, it takes money from senior citizens, it takes money from the hopeless, and pretty much it puts it in the state's pocket. And the state keeps saying, you know, we give so much money to a lot of these programs that benefit senior citizens. I never see it. All is what I see is the poor, the middle class, the downtrodden, the broken, continually giving money to something like the lottery, and their lives never get better. If your only luck in life or your only goal in life is to win the lottery, I hate to tell you, brother, or I hate to tell you, sister out there, you got a lot of pain coming. You got to put together a better financial plan, because most chances out there, even if you would win the lottery, even if that minute chance becomes a thing, you will most likely spend all that money because you have no understanding of economics and finance, because if you did, you most likely wouldn't play the lottery to begin with. I am very dead set against gambling. So enough of that. Let's continue. Here's some interesting statistics. 75% of wealthy collectors, these are people that have a net worth of $500,000 or more, they tend to collect for 3 reasons. The first is, of course, passion. What is it that I tell you guys? If you don't have a passion to collect any of these items, please don't do it. You do not want to come into the antiques and collectibles trade without passion. You want to come into the antiques and collectibles trade with passion that you can control. For instance, I have people reaching out to me that go, Sean, I want to invest in coins. What's the first question that I ask those people? Do you have a passion or an interest to collect coins? Or are you just collecting coins because Reserved Investments told you that coins are a good long-term investment in the antiques and collectibles trade? It's no different if we do studies. Whenever Fox Business, whenever CNBC, whenever CNN does an article on a comic book that broke new records at auction, believe it or not, there are people that literally will go to the internet and try to research how to invest in comic books because they think that obviously it's easy to make money in that market because somebody bought a comic book and sold it and it just sold for a record sum. That's how gullible certain people are. They have no understanding of these markets, how sophisticated they could be, and they think they're going to be successful at them. That's one of the reasons why I started this channel. That's one of the reasons why I am a consultant in the trade. That's one of the reasons why I write for publications like Antiques and Auction News. It's mainly to educate the average consumer or would-be collector out there. That's truly who I try to help with these videos. The next reason that 75% of wealthy collectors tend to collect for is for, no surprise here, investment. They want to diversify away from Wall Street, away from real estate, away from traditional assets. Well, the antiques and collectibles trade provides a great way to do that. So they put their money in coins, comic books maybe, artwork, traditional antiques, items that tend to have an inverse relationship with Wall Street and the economy as a whole. We talked about this before. The third reason, and this should come as no surprise, that 75% of wealthy collectors tend to collect for is, I hate to say it, vain, superficial reasons. Narcissism, notoriety, fame. For instance, if I put together the Sean Cermak collection of rare coins, that collection, depending on what's in that collection and its value, may get me notoriety. Now, am I planning to do that? No. You guys know I collect coins for my own enjoyment and for the investment potential of those items. I don't do it as a way to gain fame or as a way to show narcissistic traits. It's just something I'm passionate about. But there's a lot of high-end art collectors that love attributing their name to paintings that they pay $50,000, $100,000, $1 million, $5 million, $50 million for at auction. As a matter of fact, here's an interesting statistic for you. Are you aware 60% of all transactions in the high-end art market are conducted privately? Only 40% of high-profile art sales happen at auction. Ironically, when we look at other collecting categories, the opposite is true. There are more high-profile people buying comic books, coins, currency, certain other items at auction than they are buying them from dealers. I'm talking about investment grade pieces, guys. I'm not talking about the fact that you go to a comic convention and you buy a $50 comic book from the local comic dealer. Again, I'm talking about the top tier of the trade, the top 15%. Most of those transactions are done at auction on the collectibles and antique side of the trade, When it comes to art, 60% of those transactions are done privately as opposed to at auction. So I find that very interesting. Now, I know what you're already asking. Sean, what do the wealthy collect? Do I see other wealthy people buying comic books, vintage toys, first edition collectible books? The answer is yes, I do. But overall, the wealthiest gravitate towards rare coins, precious metals, fine art, precious and rare jewelry, stamps, believe it or not, antique furniture, traditional antiques, classic cars, fine wine, and what's starting to trend with the ultra wealthy and the elite are luxury goods, Rolex watches, Hermes Birkin bags. This is the stuff that's really starting to trend upwards in the antique side of the trade, where auction sites like Heritage Auctions, they're holding auctions geared towards rare Birkin bags, luxury watches, and the like. Well, what's spawning that is the income divide. The ultra wealthy still have the money, even in the current economic environment that we find ourselves in, to buy high-end Rolex watches, Birkin bags, fine wine, rare coins, artwork, precious metals, stamps, traditional antiques. All that stuff is being set ablaze right now. It is not just pop culture items, guys, that are soaring in value. Now, you may be wondering, well, what type of person then, Sean, is buying vintage Star Wars figures, comic books, toys, Pokemon cards, Magic the Gathering cards? If I were to break down the demographics for you on that, which I will be in an upcoming video, spoiler alert, it's young professionals. It's people in their 20s, 30s, maybe mid-30s, who are now getting some serious cash on hand, either through the business that they owned or through their career. They're coming into the market and they're propping up all these other asset classes that are more on the collectible side of the trade. If you ever heard the term Henry, Henry stands for high earning, not rich yet. It's an acronym. Again, high earning, not rich yet. That's a Henry. A Henry is generally in his 20s, 30s. He's probably making six figures a year. He's going into these markets and he's recapturing his youth. And he's also buying for investment. That's what's causing the current economic speculative bubble in Magic the Gathering cards, Pokemon cards, comic books, toys, even vintage video games. A lot of Henrys are going after that market. Now, here's some other interesting statistics that you might enjoy. According to UBS Wealth Management, roughly 40% of all wealthy collectors don't know the full value of their collection, believe it or not. Now, you can argue that's true because guess what? They don't have to worry what the value is because they're already wealthy. Well, ironically, you don't want to be a spendthrift even if you have money. You should have some understanding of what the value is for the items that you're buying and what you could reasonably liquidate them for if the need arose. 51% of the wealthy have never had their collection appraised. I find that astonishing. Another 44% have not had their collection insured. That means 44% of wealthy collectors out there have no third-party insurance directly related to the collectible holdings that they have. That is insane. Now, here's some other interesting statistics. And again, these are not by UBS. So I just want to make that clear. This was taken off of CNBC. I've also did some insight work with the Wall Street Journal, other publications that have stated these statistics throughout their articles that they produce on the collectibles trade over the last few years. 81% of collectors plan to leave their collections to the next generation, but only 35% of the heirs of the people that are going to inherit these collections want it. Let me state that again, and this should really strike a chord with some of you. 81% of collectors plan to leave their collections to the next generation, but only 35% of that generation want the collectibles in question. So that means less than half of the people that are going to inherit a collection want it. Over 50% of all collectors admit to overpaying for items in their collections. Over 50%, guys. That's phenomenal. Now, these statistics apply to wealthy collectors as well as general collectors, meaning people out there who may not have a net worth of $500,000, who definitely do not have a net worth of $5 million or more. Over 40% have sold an item and have later regretted it. So are you in that particular demographic? I am. I've already sold an item and later regretted it. Of wealthy art collectors, now we're going back to the wealthy people. Of wealthy art collectors, 56% are members of museums, and 32% of that 56% plan to donate their collection to a museum or foundation upon their death. Now, let's be fair, guys. That's a narcissism play. If they donate a very valuable collection to a museum or a foundation, obviously they're going to have their name attached to it. For those of you who live near the Philadelphia area like I do, you probably heard of the Barnes Foundation. If you want to Google that, that's a prime example. Don't get me wrong, I love the Barnes Foundation. Great people run it. Been there many times. Had many dates with women where I took them to the Barnes Foundation, and they loved it. Just if you Google that, though, that is an example of this. A very well-to-do, prominent collector puts together a collection, either sets up a foundation or donates the collection to a foundation because he lives on in infamy because people recognize that collection and it's attached to his name. Very often, heirs of collectors are more interested in pursuing their own passions than following the passions and hobbies of the prior generation. This is something we all have to contend with. I don't care whether you're on the high-end art end of the market, the antique side of the trade, or the collectible side of the trade. I warn you guys, in the collectible side of the trade, though, this is common. A lot of your kids, regardless of what you think, they're not going to want to collect what you collect, number one. And number two, if they do, they have to already have the collector gene. Just because you yourself are a collector and you have a son or daughter, doesn't mean they themselves are going to have that same passion towards collecting. All those particular circumstances have to be present for them to want to collect in the first place. Let's go on. Now, this is an interesting statistic. Between the years 2005 and 2011, Bordeaux wine rose 340% in value. Now, you know why I find that interesting? Because in 2005 through 2011, at least almost 3 to 4 years of that particular time span, we were in the greatest financial crisis since the Great Depression. Obviously, people who have high net worths are gravitating towards wine and fine wine. They can afford to pay a premium and store those items properly. That's why fine wine has accelerated in value during that time frame. Here's another interesting statistic on 10-year percentage returns for a lot of these collecting categories. This survey was done by CNBC, and it ended in Q4 of 2018. So it's a 10-year study. So it started in 2008, right around the financial crisis, and ended Q4 2018. Here's some historic returns for collectibles that the wealthy and the rich go after. Whiskey, rare whiskey, had a percentage gain of 582%. For the Timmies and the Poindexters that are still listening to this video, and we're 23 minutes in, and I waited specifically to this point to state this, you guys that leave me little kitty comments stating that coins are dying, coins are dead. Well, guess what? Coins rose 193% during that same time period. So you're right. When compared to whiskey, yeah, coins got blown out of the water. But compared to most other asset classes, coins were number 2 on the list, rising in value 193% in that 10-year period. The third category that grew the most was wine. Wine grew 147%. Art grew 158%. Watches grew 73%. So what does that tell you? There's a reason why the rich and the wealthy gravitate towards liquor, coins, art, watches, traditional antiques, and the like. Now, let's talk a little bit about the bad news. Most financial advisors, now I'm a little bit kind in this regard, I'll get to that in a minute, and this is how we're going to end this video, recommend that a portfolio of collectibles should only make up 5 to 10% of an overall portfolio. Well, here's what you got to understand. for those of you out there that are not yet established, let's say that you have $10,000 either invested in the stock market, or maybe after you subtract all your assets, liabilities, you actually do have a net worth of at least $10,000. Well, what that means is, if we go by this statement, collectibles should comprise no more than 5 to 10% of an investor's total portfolio. That means that you should only have $500 to $1,000 total devoted to the collectibles marketplace. Now, I'm a little bit more lenient than that. I think you can go all the way up to 20% if you are that risk adverse, meaning you understand risk adverse. Sorry. If you are that risk adverse, you can go all the way up to 20%. So what are the risks, the cons, and the pros of investing in collectibles? Let's touch on that just a little. First, I'm going to give you the risks and the cons. Collectible prices can be manipulated. Well, if you have no knowledge of the antiques and collectibles trade, that could be a very big negative. If you have no understanding of economics, finance, how these markets can be manipulated, that's a problem. There's no SEC. It's a complete free market system in the antiques and collectibles trade. This can also be a positive. If you understand economics, finance, you know how to manipulate markets, you know how to make markets, by all means, this could be a positive to you in the antiques and collectibles trade. But for the average person who spends $10,000 on a coin, doesn't know what they're doing, and then that coin, they go to sell it, and they only get $5,000 for it, guess what? That particular Timmy's going to probably wish that there was an SEC in the antiques and collectibles trade who he could go to and go, hey, I got ripped off. I spent $10,000 on this item. It dropped to $5,000. No one's going to protect you in a total free market system. Other cons include you have to have a specialized knowledge. What do I tell you guys? Some of you guys reach out to me, Sean, I want to get into high-end weapons, firearms, edged weapons, artwork, traditional antiques, coins, currency, historical documents, collectible first edition books. And what do I ask you guys during our phone call sessions? Well, what do you know about these markets? Why do you want to get into them? I can steer you as to what books you can read, how to give you knowledge in these markets. But overall, if you have no understanding of some of how these markets work, you should not be investing in them. You can casually collect in them if you want. But if you're putting any type of serious amounts of money in these markets, you got to be careful. The next risk is increased selling fees and commissions. Look, I don't care what auction platform you use, whether it's eBay, whether it's Heritage Auctions, whether it's Hakes, whether it's Morphe's, whether it's Comic Link, whether it's Certified Link, whether it's Cowan's, whether it's Glassworks Auctions, whatever auction house it is, and believe me, I've dealt with every auction house that I just named, and they're all top tier trustworthy. They're going to take a percentage of the selling price. There's probably going to be a fees associated with it, and there's commissions. If you don't know how to negotiate an auction contract, you're in over your head. Right now, all the Timmies are screaming at me, Sean, I sell on Facebook groups. I don't pay a commission. That's great, little Timmy. If you want to maximize returns and you have a 5 or 6 figure item, or even in some cases a 4-figure item, you are better off going through a vetted auction house rather than a Facebook group. I'm going to state that up front. I have more videos where I can prove that to you coming up soon on this channel. The other thing you got to understand is that collectibles overall are illiquid. It doesn't matter if an amazing Spider-Man 129 in CGC 9.6 breaks auction records this week. If you didn't consign your item to that auction and your item was not the one that broke that record, it doesn't matter. It's immaterial, because when you go to consign your item and you sell it, you're not guaranteed to get that same price. This is something that the Timmies and the Poindexters don't seem to understand. And they celebrate on collecting forums that, hey, I have a copy of Amazing Spider-Man 129 in CG 9.6, and a recent record was broken for that comic book. And I'm just using that as an example, guys. I'm not stating that's true. But what they don't understand is it wasn't their item that sold at auction. It means absolutely nothing. Markets go up and down. They're volatile, especially if they're speculative. The last risk you got to understand is that there's maintenance, storage, and insurance costs in these markets. You cannot play the antiques and collectibles trade without running into some maintenance, storage, and insurance costs, unless you are one of the 44% of wealthy collectors who have not had their collection insured. And if you are, I'm just going to state it, you're a dumbass. More videos on that to follow. Now, what are the pros? I gave you all the negatives. I'm going to give you the pros. First, you understand economics. You understand finance. You understand that it's a free market system. The antiques and collectibles trade can be great. You can manipulate it. You can be a market maker. You can be a market manipulator. You can follow the trend. You can create the trend. You can get a grading company, wink, wink, to recognize you or represent you in the secondary market if you're one of these people. Sound familiar? You can also have knowledge. Knowledge is money in the antiques and collectibles trade. Why do you think I get paid for what I do? Knowledge is money, guys. The person who has the knowledge can conduct business in a way that is light years ahead of the overall basic speculator or so-called sophisticated investor out there. Reason being is insider trading is welcome in the antiques and collectibles trade. Why do you guys think I like to spend so much time on the phone with coin dealers, auction houses, coin collectors, other wealthy collectors that I interact with? It's not only me giving them knowledge, it's also in certain instances like a coin dealer will tell me, Sean, this market's really heating up. Or be careful over here, this market's getting too hot. Or over here, this market's selling at a discount right now. I like that interaction. I like that exchange. I use that knowledge to my advantage. You can also utilize collectibles and antiques in certain instances as an inflation hedge, guys, during uncertain times. Remember, in most antiques and collectible collecting categories, there is an inverse relationship that is not often spoken that works directly against what's happening in Wall Street and the economy as a whole. Now, forget the year 2020. The year 2020, we have the Fed turning on the printing press full blast. We have inflation taking place in the stock market, in the collectibles market, even in the real estate market. It's a mess, guys. It's going to take years, if not a decade or more, to freaking settle out. So just understand that you really can't compare what's going on right now in Wall Street to that of the collectibles trade. There usually is an inverse relationship there. Now, thanks to the Fed, it's a little bit muddled. So that's all I really want to state in this video. I just wanted to do a video on some statistics, on some terminology, and the risks and rewards of investing in antiques and collectibles. If you found this video helpful, and I'll know by the comments section below, I will do a follow-up to it because there are more statistics that I would like to share with you guys overall in the antiques and collectibles trade as it relates not only to wealthy collectors, but also the average person out there. So I hope you found this video fascinating. If you have, please consider liking, please consider subscribing. Let me know your feedback in the comment section below. Thank you and good night.